Just a minute. I'm sorry. Yes. So admission of a partner we discussed in our previous class. So this admission of a partner, whatever we discussed, what are the accounts that are supposed to be open under admission of a partner? The valuation account, partner's capital account, bank account, balance sheet. Right? These are four we are supposed to open. And generally, admission of a partner, working notes is relating to calculation of sacrificing ratio and transfer of distribution of goodwill that is brought in by the new partner distributed to the old partners. Okay, this was what we did in our previous class. In today's class, I'm going to discuss about retirement of a partner and dissolution of the partner. Retirement and dissolution separate. Under the retirement, we also cover the death of the partner. Okay, I'm sharing screen here. Please do. Yes. Retirement of a partner. So generally, on the retirement or death of the partner, what we do, existing partner, the partnership will comes to an end. Okay, and the new partnership deed forms. And the remaining partners, whoever in the business, will continue the business with the changed terms and conditions. Okay, generally there is a very less difference between the accounting treatment of admission or the accounting treatment of the retirement and death of the partner. Okay, means for the retirement or death of the partner, the difference of accounting treatment is very less. That is also last bit. That is what we call settlement of account and where to transfer data. Okay, generally in both the cases, we will find the amount due to the retiring or deceased partner, and whatever all the amount due, that is for the retiring partner, that is transferred to his cash account, transferred to his loan account, or by payment directly. In case of deceased partner, that is partner who died, in case of deceased partner, the amount due to that partner is transferred to his legal heirs. Legal means legally whoever the people in poor people are eligible, to those people, legal representatives, this amount will be transferred. Rest all same. Okay. So computation of profit and loss. The next, coming to what are the items? Yes, here from the examination point of view, I'm telling you all, please do attention, pay attention. Retirement of a partner or death of the partner, from the examination point of view, we will do. Okay. If you open a credit balance, these are the items which we show on the partner's retirement or a retiring partner. What are the amounts due to the retiring partner or that deceased partner? Generally, partner is a retired partner or a deceased partner is eligible to receive these following amounts. Okay, like a credit balance, of his capital account and current account balance, his share of goodwill, his share of accumulated profits, if any, his share of profit till the date of his death or retirement, his share of value of the revaluation account, okay, and if any interest on capital payable to him, that, and if any interest on loan due, that amount, and if any salary and commission due, that amount, all these will be even good. To be received by the retiring partner or deceased partner. And what these are supposed to pay to the company? What are the amounts to be collected from the retiring or deceased partner? These are the amounts to be collected. If any, instead of credit balance, if we have debit balance of the current account amount and his share of goodwill written off, if anything in the quotient balance sheet, and any accumulated losses are there, and loss on revaluation, okay, and any loss made by the partner, any drawings, interest on drawings are there on behalf of that retiring or deceased partner, these amounts we record on the, we deduct from the retiring partner's account or deceased partner's account. So the same thing, if you look into the question format, if you look into the question format, here I will see the account, look into this account. Retiring or deceased partner's capital account. Only one partner I'm opening here. Retiring means the partner who is dying or who died or who is retiring. If you are to open that particular partner's account, these are all things will come. Rest of the continuing partners, as usual, how we did under the admission of the partner, same way we do in the retirement also for the continuing partners. But only the difference is in the matter of retiring or deceased partner, and where the difference comes also. See, as usually, his share of capital, his share of revaluation profit, his share of accumulated profits, his, we will do, okay. And what additionally you will get here, not in admission, these are like the retiring or deceased partners share of profit till the date of retirement or death. The retiring or deceased partner share of goodwill, okay, from the continuing partners in their gaining ratio. Next, if any interest on capital to be received by the partner, or if any salary or commission to be received by the partner. These are the only additional items which you get in a retiring partner's capital account, apart from what you did in the admission of a partner. On credit side, what do you get? Credit side, instead of the balance brought down means capital balance is liability side, will take on the credit side. If it is capital balance is showing a asset side, we take it on the debit side. Okay, and the next revaluation loss. Profit, credit side, loss, debit side. Accumulated profits, credit side. Accumulated loss is if any given in the question balance sheet, debit side. All these are in his share, in the share of retiring or deceased partner only. And next, his share of profit till the date. Till the date, if a firm made a profit, his share on credit side. If the firm made a loss, his share on debit side. And goodwill. This goodwill is that the retiring partner received from the continuing partner in his share in the gaining ratio, and the goodwill which is appearing on the debit side is goodwill written off, means a goodwill which is given in the question balance sheet, that has to be write off, and his share, whatever his share of goodwill is there, writing off amount, that has to be taken. And in addition to that, what you will get in the credits debit side of the partner's capital or retiring partner's capital account, interest on drawings. These two are the additional amounts which you get in addition to admission of a partner on debit side of the retiring or deceased partner's capital account. Okay. So then usually in admission, what we did, we used to at the closing balance, we used to write as a balance carried down, right? For the partners, after finding the debit total, credit total, the difference amount we used to write as a balance carried down. But here in case of retirement or death, the partner is retiring, so we will not continue his account. It died. we cannot continue his account. So then what is the amount? How do you transfer that amount? To whom you pay? So in case of retirement, the settlement of account is three types. One, pay the amount entirely to the retiring partner. Second method, transfer the amount due to the retiring partner to his loan account. Third method, partially pay the amount and transfer balance to the loan account. These are the three types of settlements for the in case of retiring partner. That is what. So this loan account, whatever is there, that is balancing figure. That is the difference in the credit and debit balance of the retiring partner. So in that balancing figure, instead of writing as a balance carried on, we will write as a loan account in case of a retirement. Then what about in case of deceased partner? He died. Whose loan you will transfer? So in case of a deceased partner, the balance amount will be given to whom? His legal representative, whoever the people eligible to receive his amount on his behalf, to them we transfer. That is what in case of deceased partner, that is the partner who died, we will write to the legal heirs account. Okay, we will write to the legal heirs account. So whatever this last transaction is there, that is our balancing figure, which we used to write as a balance carried down in general in the partners capital accounts. Here, as those are leaving the business or left to the business, so instead of balance carried down, we transfer either to the loan in case of retirement or to the legal heirs in case of death of the partner. This is the format of the partner's capital account in case of retirement or death of the partner. Only one partner account is asked by you, by the examiner. Means this is so simple. If you remember this format and are able to substitute the values in the format. Now let us see how to calculate new profit sharing ratio. Yes, under the retirement of a partnership, partner, the accounting treatment is as similar as admission itself with the one or two changes. So in I'll recall once in admission what we did. We calculated new profit sharing ratio. We worked the goodwill and transferred the goodwill, new partner share of goodwill to the old partners in sacrificing ratio. After these two working notes, we opened revaluation account, we opened partners capital account, we opened bank account because capital is coming in, and we also prepared a new balance sheet, right? So, same way, in case of retirement of a partner, the account treatment involves new profit sharing ratio. Calculation of new profit sharing ratio will be there. Some distribution of goodwill also will be there. The goodwill, but here in admission, new partner bring the goodwill, old partners share in sacrificing ratio. In case of retirement or death, remaining partners, the partners who are continuing, will pay the goodwill to the retired or deceased partner. So when a person is going there, gain. So in which ratio? In gaining ratio. I'll discuss this. So next, so these two adjustments we do here also. Only the thing, their gaining ratio, their sacrificing ratio, here it is gaining ratio. Their new partner is getting the goodwill and paying to the old partners. Here, continuing partners pay the goodwill to the retiring or deceased partner. Now, after working notes, what all we open here, in case full sum is asked, full question and full solution is asked, you are supposed to open revaluation account as usually, partners capital account as usually, bank account because the partner is paid or if paid, bank account. If transferred to the legal heirs account. If asked, then balance sheet. Okay, a new balance sheet. So only the transfer goodwill, accounting treatment of goodwill will differ in a retirement, death and admission. Just all almost same. Okay, so I have taken sometimes in the examination you will be asked to prepare the entire question like show a new balance sheet after death or retirement of the partner. Sometimes you will be asked to prepare only the retiring partner or deceased partner's capital account, depending on the question. Okay. Okay. So sometimes in the exam, you will be asked to prepare only retiring partner or deceased partner's capital account. In such case, if you remember this pro forma and know how to do each of the calculations, you will be able to do. So today's class, I'm going to teach you the two sums upon this. So before that, we work out the problems. I'll tell you the easiest way to remember how to calculate new profit sharing ratio and gaining ratio. It's a simple as compared to the admission. See, in this retirement or death of the partner, calculation of new ratio is very easy when not given in the question. Means in question, new ratio is not given. Okay. In that case, simply old ratio is given, has been given, and the partner who died had been given. Say for example, ABC are partners. ABC ratio is 3:2:1, and they said B died. So whoever the partner died, eliminate his share. Eliminate the partner and his share. Then A and C, whatever their old ratio, that itself becomes the new ratio. Again, that itself becomes the gaining ratio. Okay. So again, I'll tell you, old ratio, in retirement of the partner, generally, if whoever the partner retire or die, eliminate that partner and his share. Automatically, the remaining partners share whatever is there, that itself becomes new ratio and gaining ratio when a new ratio is not given in the question. If it is given, new minus old you will do, gaining share. How do you calculate if it is given in the question? New gaining share, new share minus old share. By doing that, you will get the gaining ratio. Okay. The next treatment of goodwill. As I said here, in retirement or death of the partner, the goodwill, because when a partner is going out, existing partners are taking his share also, right? So existing partners are taking his share also. So in retirement of the partner, the continuing partners are gaining, right? So these continuing partners pay the goodwill to the retiring or deceased partner. Okay, in what ratio? As they are gaining, so they pay the gaining ratio. So first you are supposed to find the goodwill of the firm if it is not given in the question. Find goodwill of the firm, and from the goodwill of the firm, calculate the retiring partner's share of goodwill or deceased partner's share of goodwill, and whatever the retiring partner's share of goodwill you get, that distribute a gaining ratio to the retiring partner. That means the retiring partner's share of goodwill is contributed by the continuing partners in gaining ratio. All these you will understand once you start working the problem. One problem if you have. These are the journal entries which you are supposed to pass. Done? Okay. Now, yeah, please all of you open this question 163 in your study material, page 163, question number 2, and the same question number 4. We are going to work out these two now. Please, all of you, open your textbooks, Retirement of a Partner. Hope this screen is visible. Word document. minus 4 by 9 equals to 9, 6 minus by 3 minus 2 by 9. So, goodwill. Who is retiring? Dinesh. D. D 2 is to 1 by A and M will pay. Okay. So what is the goodwill amount of D? 10,000. Goodwill of D is 10,000. So this 10,000 A and B will share this 10,000 A and B will share in a gaining ratio. Okay. Okay. So gaining ratio. Gaining ratio. So what is the gaining ratio? 2 is to 1. So 10,000 if gaining ratio 2 is to 1 means 2 by 3. 2 by 3 means how much you get? 6,666. 6,667 points you get. Okay. And 3,333 by A. This is by A and this is by A. A will pay. A is paying 6,637 and B is paying 3,333 rupees. Okay. I'm explaining now. See here. AD old ratio, gaining ratio. How you get new ratio? Two are there. Gaining ratio, how you get new minus old. If you do new minus old, you will get gaining ratio of A and M. With the retirement of D, A and M are gaining 2 is 2. So whatever the ratio they are gaining, to the extent of that, goodwill has to be distributed, paid by the A and M to D. So D's goodwill given in the question 10,000. So A is paying 6,000 change and B is paying 3,000 change. Now what will we do? Now open. So this is over. Now open the table. Revaluation account. Do revaluation account as usual. And how we did it in the admission, same way. Revaluation account. I hope you all understood the preparation of revaluation account in the admission. So now, what is the first adjustment given? Building to be taken at 33,000. Right? So in question balance sheet, buildings are shown as 30,000. That means appreciation. Right? Buildings. Every time you do, you should remember this. I'll copy paste this. Okay, revaluation. Right. So here, buildings are, what is the value of buildings? 3,000 increased. Write down. Or increase on the increase of assets on debit credit side. So 3,000. Now next what is it? Debtors 210 is not included in the above. So doubtful debts. So doubtful debts decrease. So how much? 210 rupees. Next what did he said? Stock to be raised. Stock to be raised. Okay. To what extent? 190. So he directly gave. So stock asset increased. So 1,009. How much? 920. Next, that's all. Adjustments relating to assets liabilities are over. So now what do we do? Find the difference. This is 4,920 total. 4,920 total is, and debit total is only 210. So what do we do? Partners capital account. Here, including retiring partner, we take. Who are the partners? A. Okay. B. B not D. Who is he retired? D na? D and M. Okay. So what is the difference? 4,000. Total of all the three partners amount is 4,710. 4,710. So now this in a old ratio. Old ratio to all the partners. 4 is to 3 is to 2. Okay. 4 is to 3 is to 2. So that is 9. So do it 4,710 divided by 9 into 4. 4,710 divided by 9. 523. 523 into 4. 2093 is there. A 2093. 523.33 into 4. We said that is D 2093. 23.33 into 4. 523.33 into 2. 1046. 1046. We can make it as a 7. And 523.33 into 2. 1046. This is for M. 1047. This is for 1560, 1570. Right? So these are the shares of all the partners' revaluation profit. Okay. Now let us open partners capital account, because here we are asked to open the full capital accounts of the partners, right? So we open partners capital account. What are the partners we have here? A, D, and C. A, D, and M. Right? This side also same order. A, D, and M. Right? Now let us erase these. This is the table, old table I copied. Right. Balance brought down. From the capital accounts, take A 24, 18, D 18, C 12. So 24,000 for A and D 18,000, which I am taking from quotient balance sheet. Okay. Capital balances of partners, which I am taking from quotient balance sheets. Right. Now, after that, this bank will not be there. Okay, reserve fund. Do we have any reserve fund? This is also not there in this question. No reserve fund given to us in the question. Okay, now, okay, revaluation profit we got in this question. In this question, we got revaluation profit. So write down revaluation account. So what is the amount? What are the amounts that in revaluation we got? A 2093. We can round it off to 2090 here. Okay, you can round it up to 50, 1050. Okay, 2090. B 1570 and M 1050. Revaluation profits from revaluation account to partners capital account. Okay. Next. After this, goodwill. Who is taking the goodwill? Modi is taking the goodwill. So goodwill from whom he is taking? From old partners. That is continuing. A and D. A and M capital. So from both together, D is getting 10,000 goodwill. Now here, both of them are paying to D. So D capital on debit side. And A paid how much? 6,667. M paid how much? 3,333. This is the amount they paid. Right? We can round off this also. Here unnecessarily we did. Okay. We'll take it as 70. This is below 3, so we'll do it 300. Right. Okay. After that, see again look into the question. Finished share of goodwill, Akash Modi continued amount. That's all. No other information is given to us. So we transferred balance capital balances from quotient and revaluation profit from from revaluation account and goodwill that is contributed by continuing partners to the retiring partner and on the credit side and retiring partner how much they share that is deducted from the continuing partners. Right? So now what he said, retiring partner, that's no other information has been given to us. So what we do, we will retaining partner's account has been transferred to the loan. He has not been paid. Loan account. Whose loan? Retiring partner. Who is retiring partner? D. So D's loan account. So find the difference. D total is how much? D total 18,000 plus 10,000. 28. 28 plus 1570. 29,570. Okay. So but okay. So that in question we don't have any goodwill. So that these are only on the debit side. 29,570 amount transferred to the D's capital account, loan account. Because loan he himself gave. If nothing is specified in the question means it should assume that amount due to D retiring partner transferred to the loan account. Okay. Yeah, next. Balance. Remaining partners, you should do the balance. What is his balance? M balance 13,050. Okay, 13,050. The difference is how much? You already paid 3,003. 3,000, 10,000, 12,070, I think. From, okay, anyone? Calculated 13,050 minus 3,330. 9,720. 9,720. Right? Now for A. What is A's total? A total is 26,090. Right? 26,090. So A total 26,090 minus 6,670. 19,420. Okay. Done. The balance carried on. See, three partners. One is retired. Retired partner, we will not write as a balance carried on. We will show as a loan account. Done. After this, we are supposed to prepare balance sheet. Balance sheet. So what do you write? New balance sheet after retirement of D. New balance sheet after retirement of D. Right. Now these all will change. Who will come here? To save the time, I'm just copying it. So now what is that? Capital. Capitals. Who are the partners we have? A and M. A. What is the A's capital? 19,420. And M capital 9,720. What about D? D loan account. Okay. D loan account. What is the D's loan amount showing? 29,570. Right. So next whatever we have here, other liabilities, that has to be taken as it is. So because we didn't do any changes. So creditors, what is the amount of creditors given in the question? 8,280. As it is, we'll take. No other liabilities. Now come to the asset side. Asset side, first one is cash. Cash is not got affected. Why? Because retiring partner has not paid any cash. His entire amount transferred to the loan. So cash not changes. So we take as it is. Cash. Cash amount 6,600. Next, debtors. Debtors affected. What we did, debtors, there on evaluation debit side we took. So minus 5,880. So from that, doubtful. Doubtful debts how much? How much he said doubtful? 210 he said. So 210 we subtract. So from 5,880, if you minus 210, 5,670. Right? Next, what do you have? Stock. Stock any amount? Yes, stock increased. So stock, what is the information given in the question? 9,600. Right? So appreciation, increase. So how much increased? Stock increased how much? 1920. 1920. So what is the amount here? 11,520. Okay, 11,520. Next, what do we have? Machinery and building. Machinery, nothing is given, so we take as it is. Machinery, whatever is given in the question bank, that only we take because nothing is specified. 10,200. Buildings. Yes, buildings again, he asked to depreciate, right? Increase only. Buildings. Buildings 30 were increased to 33, so directly we can take this 33,000. Right? So everything we took from the question, whatever has been given. Now find out the total of balance sheet. Find out the total of balance sheet. 19,420 plus 9,720 plus 29,570 plus 8,280. Debit side you are getting 66,990. Let us see on the asset side. 6,600, 5,670 plus 11,520 plus 10,200 plus 33,000. 66. Got it? 990. Both the sides. Is that tallied? Okay. Realization profit you got 5,130 or we got that's what I say. Don't look at these answers. Okay, children. This is about your balance sheet. Tally, right? Very good. So this is the retirement. Even in case of death, the same thing we do. Only the difference is that for in case of death, for say D instead of retiring died. So here instead of you write D loan, we write D legal executors. That's only the difference. If a partner died or retired, the thing is the same. Instead of you write D loan, you write D legal executors account. Got it? Done? Anyone has any doubts? Please. I thought of doing one more sum also, that is fourth one. Only one single partner's capital account is given, how to take up. Anyone? Shall we? Are you all ready? Till they disconnect? I'm ready to do. What about you others? You can take the pick of this question. So retirement of partner, page 163. Please take the pick solution. Question number 2. Take the pick of this in your books only. Okay. Now, next revaluation account, take the pick. Take revaluation account. Next, partners capital account. Take partners capital account. Now, new balance sheet. Take the pick of new balance sheet. Done? I hope everyone. What is no? You can unmute your mic and can respond. You can unmute your mic.
Excuse me, ma'am.
Yes.
Ma'am, are you sharing the link of this problem?
Already I shared.
Sorry, ma'am, I got disconnected. Can you share that once again?
This tomorrow we have class now. After completing tomorrow also I'll share. Join tomorrow also. I'll share tomorrow. It is in Word document now. I'll share tomorrow. Okay.
Okay, ma'am.
Okay, children. Till they disconnect, we'll do the fourth form. See, look into the fourth one. Such a simple question. A, B, C were partners sharing profits and losses 3:2:1. Is this question visible? Is question visible?
No, ma'am.
Yeah, now visible. A, B, C were partners sharing profits and losses in 3:2:1 ratio. B dies on 31st December, August as per partnership deed. The executors of the deceased partner are entitled to capital balance on the date of death, interest on capital, share of profit based on the previous profits, and goodwill of the entire firm. We executors have been paid 3 yearly equal amounts of interest. So forget about this part. Till here, how to do, we'll see. Question number 4. Question number 4. (163) only. Open partners capital account. Okay. Open partners capital account.
Ma'am, your screen has not changed.
Sorry. Only one partner we are asked to open. So who is the partner died? B. So B's capital account only we are opening. B's capital account. So B's capital account, what is the B's capital balance? Given in the question, 6,000. So balance plot on 6,000. Next, second point, interest on capital from 31st March to date of death. So here you are supposed to know partner died is D, died on which date?
August 31st.
August 31st. 31st August, right? Accounting year ending on accounting year is ending on
March 31st. March 31st.
31st March. That is 31st March. That is beginning is accounting year is 1st April to 31st March, right? This is the accounting year. So he died on 31st August in the sense from 1st April to 31st March, sorry, 31st August, you should take the number of months. Number of months from 1st April to 31st August. How many months you will get? How many months? 1st April to 31st August. You died on 31st August, right? So count April, May, June, July, August. April, May, June, July, August. 5 months.
5 months.
5 months? Emma? Okay. So 5 months. Number of months? 5 months. From 1st April to 31st March. Sorry, 1st April to 31st August. Died on 31st August 2012. So accounting year is 2011 to 1st April 2011 to 31st March. This March. Yes, sir. Okay, 1st April. So 5 months. So interest on capital.
मैम अकाउंटिंग ईयर में मंथ और ईयर रॉन्ग आया.
Sorry.
अकाउंटिंग ईयर में 31st अगस्त ना मैम.
Yes.
एंड 2013.
13 not. He died on 31st August 2012.
हाँ तो वहाँ पे 13 आ गया मैम.
Accounting. See, accounting year is starting from 1st April 2012. That interest on capital from 31st March 2012 means it's nothing but 1st April 2012. Accounting year 1st April to 1st April 2012 to 31st March 2013. This is the year. In between this year only he died. That is on 31st August 2012. That is middle of the accounting year he died. Okay now?
Okay मैम.
So 5 months. So for 5 months, 260 upon the 6,000 capital, calculate 6%, 360 you will get. right? 6,000 capital into 6%, 360 upon 360, 5 months. $150 is going to be your what do you call in
Ma'am, your voice is not audible, ma'am.
Ma'am, your voice is not audible.
again coming. So profit share. Whose profit share? D. Who died? D na. So D's profit share. D ne kada question prakaranga B. B profit share. The question ki B and cheppi D and rasa. Okay. B profit share. What is the previous year profit? 24,000. Right? So how do you get previous year? Question like ichchadu previous share profit into his share into time. Okay. So profit previous year profit is 24,000 into his share. How much? What is his share? 2/6. 2/6. A, B, C. What is that? 3:2:1. So B's share is 2/6 into time. When he died, 5 months, right? August means for April to August, 5 months. That is 5/12. So do this. To do this, you will get. So what 24,000 into 2/6 means 24,000 divided by 3, 8,000 into 5 divided by 12, 3,000, 33, 24,000 2/6. 8,000. 5 months. First April, May, June. 5 months, na? 5 divided by 12. 3,333. 333. This is his share of profit. So that has to be kept here. Next, what is goodwill? Goodwill, his share we are supposed to find. So his share of goodwill, that is B share of goodwill equals to firm's goodwill into his share. Only profit ki interest on capital ki maatrame time తీసుకుంటాము. Okay, we take only for profit and interest on capital calculation time. Right. Firm's goodwill is given as 30,000 into his share 2/6. The share 2/6, which is equals to 10,000. Okay, and actually 10,000 is contributed by remaining partners. Okay, this 10,000 is contributed by remaining partners in capital, in their gaining ratio. So what is the gaining ratio? This also will be, you will have marks. If you just write 10,000 is share, okay. But if you write what is the each of the partner contributed, you will score marks. So A is the, what is the gaining ratio? 3:1. 3:1 means 4. 2,500 into 7,500 and C 2,500. Okay, again change to C ratio equals to 1. Gaining ratio equals to 1. How? B is retiring, so eliminate B's share. That's how. Got it? Are you there? Yes. Next. Okay, so now what is the B goodwill? His share of goodwill. Actually, we are supposed to write A and C capital because he is taking from A and C. So what is the total goodwill he is getting? 10,000. Okay. So that's all. All the transactions given to his credit we transfer. Now, what is the total? Here, balance you will find legal heirs account. Balancing figure. Okay. Okay. So what is the amount? Did anyone? 6,000.
19,383.
150 plus 10,000 plus 3,333. 19,483. Is that what you answered? Emma?
Yes, ma'am.
Very good. So that's the total. Over. Okay. This is how you show. Single account means that's all. But your workings matters. Okay. Your workings matters. Please take the screenshot of this. Done. Now this one, how you shared goodwill. Okay, this working notes screenshot you take first, then partners B's capital account, that is this is partners capital account screenshot. Done. Thank you, children. I have next class.
Thank you, ma'am.
Be there once again, all of you. Very good. Yes, any doubts? You can unmute. You can unmute on the top. So any doubts, you can unmute yourself and you can talk. I hope no doubts. Thank you, children. Thank you for being here. We'll meet tomorrow's class with insolvency and the higher purchase. Insolvency of a partner, important topic. Actually, I plan to complete today itself. Only retirement debt complete period. Tomorrow's class will discuss insolvency under the partnership. Then we'll do higher purchase system. Thank you.